You know, with crypto Twitter like this, who needs anti-crypto Twitter?
Hit me on my phone, you could put it in a page. 100 miles from my home, 20 minutes to the stage. Going liquor for my friends, smoke a couple for my friends. But we wanted this forever, so fuck it, we gon' rage like Rashid, bust it, send it, pump it like 100 hands couldn't hold that.
What's up, guys? Circa here, and I'm back with another portfolio update. I just wanted to update everybody for whom it's at all helpful on how I'm managing my portfolio. Again, these videos are about my active management with my DeFi wallet. I do have some cold storage, as does my company, which I manage the treasury for, and that stuff we don't touch, and it's all blue chips, L1s, and BTC, mostly BTC. And yeah, let's get into it. So I'm going to do a screen share here. We can take a look at my portfolio as of right now, and I can try to summarize the changes that I've made, although that is a little difficult given that a lot's happened since we last spoke. So, okay, DeFiKingdoms. I sent like half my heroes on the Perilous journey. For those of you who don't know, the Perilous journey is like basically a gamble of your heroes, which are playable NFTs. And you get rewards, whether they die, which they get burned, or even if they make it, you get rewards. Rather, I guess it's the other way around. Even if they die, you get rewards. And so the risk to reward ratio was pretty good on a lot of my heroes, so I sent them. I expect to get about half of them or a little bit less back. And when I get them back, I get a bunch of raffle tickets for Gen Zeros in Crystalvale. Crystalvale is coming. DFK announced the other day that they would have a subnet, the DeFiKingdoms Crystalvale expansion. So DFK is launching their own blockchain, a subnet of Avalanche. All the validators are getting rewarded in Jewel tokens, which is like the power token of the original DeFiKingdoms. Jewel is gas on this chain, and all those validators will also support the AVAX network. So that's awesome. That's really cool. It got announced. And so I started DCAing back into Jewel below $5. And I have a nice little Jewel allocation now because of that. I'm very excited for this. So my heroes come back in 6 days. Soon after that, on March 30th, this launches. And I think it'll do well. There's so much crystal being rewarded for single-sided Jewel staking, and people can't stop selling their Jewel. I'm excited about it, though. I'm going to hold on to the Jewel that I'm able to DCA into. Besides that, what have I been up to? Well, I've got my Cosmos ecosystem plays. Oh yeah, I stabled up. I wanted to make sure I was stable enough for, buying any further downside on Bitcoin. So I have, a good like 20% of my portfolio in UST on Anchor. It's earning 20% interest. I like that. And, what's really cool is there's this protocol called Edge Protocol, and they're like an abracadabra, right? You can oh god, give me a break. I gotta use a VPN. I use a VPN to access this. But what they do is they allow you to borrow against yield-bearing assets. One of those being aUST. aUST is like the receipt you get back for basically earning. You deposit your UST on Anchor and they give you aUST, and that's the receipt you get for your yielding position. You're yielding 20% on it. And then in here you can borrow against that aUST. LunaX borrowing right now is really low. What's the LunaX is 0.49. So you're getting 20% on your aUST, you're paying 0.49% on your borrowed LunaX, and then you can do anything with that LunaX that you want to. I'm pretty sure you can borrow against that as well for recursive, Luna positions. But yeah, it costs you nothing to hold Luna. That's pretty cool. You can also borrow UST, but the borrow APY is huge. But, it's not crazy. You can it's less than the Anchor APY, which is 20% or 19.5%. So there's an arbitrage there, right? You borrow UST at 17.93. There's a full 2.5% higher for deposits, savings deposits on Anchor. So that's good. We like the UST, and the more UST that's created, the more Luna is burned. As you guys may know from my last video, I got into Luna at $60, and then it promptly went to $103, where it now sits. And so the Lunatokinomics, if you haven't researched them ever, and I'll try to give a brief explanation, essentially, Luna has an increase in quantity through staking. So Luna is emitted for Luna staking. So more is created. There's an inflation. But in order for UST to be created, Luna has to be burned. The only way the UST supply expands is if Luna is burned, which means that when there's a high demand for UST, there is a lower supply, a net negative or deflationary effect on Luna. And that's probably why Luna is mooning while the market is tanking all over the place, is because people want to get into UST because it's the only truly decentralized stablecoin. You know, USDC has regulatory risk and they can freeze your assets if they want to. Same with USDT. You know, it's constantly subject to FUD. DAI is basically levered USDC in a lot of ways because they loop USDC to borrow DAI or some shit like that. It's pretty much heavily tied up with USDC. There's all this risk associated with different stable coins, except for MIM. MIM is decentralized, but it's CDP backed, and it's looped with UST. There's a lot of Ponzi-nomics that bring different risks to these stable coins, but UST is your only option if you don't ever want to get your coins frozen, which a lot of people are worried about given that regulations are coming. So people like the UST, and insofar as they like it, especially with the 20% APY, that's like the best stablecoin APY you can get right now. So in a bear market, people want a decentralized stablecoin. They want high yields on stablecoins. So UST demand it balloons, and that causes Luna to moon. And you can tell this. So to give you an example of what I'm talking about, you can check out this chart. It's terra.smartstake.io/history. And if you go here, you can see the amount of Luna circulating supply, which a month ago it was at 401 million, and now it is at 361 million. And then you can see the burn going up, this red line, the burn goes up. And so this is the amount of Luna that's burned, or the daily change in Luna total supply. And the Luna in circulation continues to go down. This is very cool. Here's the UST supply, goes up. So you can see it more and more. It's accelerating change. And this kind of introduces tokenomics that might make you think, oh, in a bear market or in a bear cycle or in a bearish trend within a bullish trend, which is what I believe this to be, Luna should do well because it's being burned. And then people see it's being burned. It's a reflexive asset. People see the supply going down and the price going up, and they're like, I need to buy some Luna. And that makes the price go up more. And so you've got the reflexive properties of Luna. You know, someone sees the price chart and they're like, oh shit, I'm FOMOing right now. They buy some. That makes the price go up. And then you've also got people seeing the Anchor deposit APY, and they're like, fuck, I gotta make a big deposit on Anchor because look at those tasty APYs. Let me show you. Here we go. APY 19.46. And you can drag this back, and see historically it's just been pretty dang steady. I won't go into the actual mechanics of Anchor, which are interesting as well. Where does this APY come from? How does it work? It actually works through borrowing and through staking and Luna emissions. It's a pretty cool cycle, but I won't go through it. But yeah, so people see this and like, I need UST because I'm not going to get yield on my stable coins that's higher than this, and I want to be in stable coins because I'm scared. And so yeah, I've got a big deposit on here earning 20%. I like it. Let's also talk. So we've got Luna covered, right? I bought Luna at $60. It's now at $103. I bonded it in an LP. I put it on Osmosis, which I'll talk about in a second, where I was getting like a 43% APY. And then it started mooning, and I was like, I wish I had just held it naked, you know, without being LP'd, because now I'm losing to impermanent loss. But I unbonded, and the cool thing about Osmosis is I think you still get rewards even as you're unbonding, which is different than like if you're staking and you click unbond, you don't get rewards anymore. You're not staking technically. You're just waiting to get your assets back. But on Osmosis, I think if you click on bond, you're still getting the rewards. You're just waiting for it to unlock so you can sell it. So I hit unbond on my Luna UST, and it's unlocking today or tomorrow. And then I'm going to sell 60% of my Luna. Why? Because that means I'll have a free bag of Luna. You know, I bought it at 60. I sell it at 103 for 60%. I've just got all my money back. I think that's how it works, right? I bought it at 60. And then now 100% is the amount that I bought at 60. If I sell 60% of that, I should have all my money back. Now I have a free Luna bag. Oh yeah, that's tight. We like that. So I'm going to do that in the next day or so, and I'm just going to let it ride. I might throw it into Anchor because, actually, let's see how Anchor's borrowing APY is right now. Sometimes it goes positive, which is awesome. Yeah, your net APR is 0.18% on deposits. Oof, that rocks, right? You get paid to borrow money. Love it. And you get to keep your Luna. Amazing. God, crypto is tight, but you wouldn't know that from all these bears on crypto Twitter lately. All right, so we covered Luna, we covered Edge Protocol and how I'm waiting. Oh yeah, I forgot to mention, they have a 15 million aUST cap right now, $15 million. I actually caught the raise from 7 million to 15 million. I saw the tweet, and by the time I got there, it was gone. So people are waiting on this. If they raise the cap on aUST again, you can bet your bottom dollar I'm going to want to get in on that. That would be sweet. So let's hope. Let's hope that they raise that cap soon. So we covered Edge Protocol. We covered Luna. We covered Anchor. Now let's talk about Cosmos. So my conviction on Cosmos has only grown. The Evmos airdrop, which basically we talked about last time I updated you guys that Cosmos is this spoke and hub model of much like Polkadot, parachains, where it's like you have your central chain that provides security to the whole network. And it's very simple, right? It's just about the security layer, the consensus layer. Then through their protocol, Cosmos SDK and the inter-blockchain communication protocol, you can create a chain very easily using Cosmos SDK. You create your chain, you link it up to Cosmos Hub, and now you have a chain that's secured by the Cosmos Hub, and you have your own validators and your own native gas coin. It's like AVAX subnets, or at a technical level, it's not like AVAX subnets. At a technical level, it's not like Polkadot and Kusama parachains, but same principle applies. They're both using this sort of security layer, or in Polkadot's case, a relay layer, to communicate with all these other blockchains. On the Cosmos Hub, as one of the chains, you have JUNO. Originally, Cosmos planned to do smart contracts right on Cosmos. So you would be able to host smart contracts on Cosmos just like you do on Ethereum, and all of that coding, that script would run on Cosmos. It's unclear whether they're going to do smart contracts, because now JUNO came out and said, let's take that burden off of you of validating all these smart contracts and having that architecture built into the Cosmos Hub. We're going to be the smart contract execution chain on Cosmos. And a bunch of Cosmos validators got together and created JUNO. And JUNO looks like it's going to be the sister hub where the smart contracts get run, inter-blockchain smart contracts. So I'm bullish JUNO because there's 100% APR on staking. It's been up only, And it's where, like, if smart contract execution becomes a chain-to-chain thing on Cosmos Hub, it'll be through JUNO probably. We'll see how it works out, because there's a little bit of uncertainty where it's like, does Cosmos Hub still want to do smart contracts? Are they particularly happy about JUNO doing it? We don't know. On top of that, we have another chain that launched recently and then promptly shut down because they weren't able to do what they were trying to do. They had a bunch of errors at launch, but Evmos. Evmos was going to use CosmWasm. CosmWasm stands for Cosmos WebAssembly Virtual Machine. WebAssembly machine, right? So you have your Ethereum virtual machine, right? Which is how any EVM chain like Avalanche or Harmony or Ethereum, or Aurora, which is built on Near. Any EVM chain uses the Ethereum virtual machine, this runtime environments for smart contracts based on the Solidity programming language. On Cosmos, it's diff. It's a bit diff. You have CosmWasm. That's the plan. It's a WebAssembly based, runtime environment. Evmos is trying to do both at once. They're going to have EVM compatibility on Cosmos with also Cosmos WebAssembly virtual machines. And they tried to launch a dual, EVM, and I have Evmos on my MetaMask. It's an EVM chain, but it's also a Cosmos chain. It's very weird. I got airdropped Evmos on Ethereum and on Cosmos. Different amounts. I was able to stake them through some roundabout methodologies. They were kind of difficult, but the official rec drop launch that they were planning on having for Evmos hasn't happened yet. So they shut down the chain. I don't know what's going on with my staking. Apparently someone was able to get in with staking very early, and which is it resulted in them getting like a 3,600% APY on their deposit during the first epoch. I got in pretty early, but I don't know what I got yet. But it's interesting. So Evmos is still yet to fully launch. I'm still very bullish on it. I think it's going to be great. I think a bunch of people fudded it because they were just like, oh, I didn't get my free money yet. But I did. It's not worth anything yet, but I got some coins, and I'm generally excited about it. So, yeah, that's everything that I wanted to update about Cosmos. Here's what I'm doing, right? So this is JUNOSwap. It is a DEX launched on top of JUNO, the first smart contract on JUNO, and you can swap and you can provide liquidity. There's no rewards for providing liquidity yet, but people surmise that providing liquidity on JUNO, on JUNOSwap, will get you an airdrop. If not, get you very early when rewards are turned on. So I have JUNO UST and JUNO Atom LPs here. They represent about a combined like 2.5% of my portfolio. Then on Osmosis, I have Atom Osmo, which is like 1%, 0.76% of my portfolio, and Atom JUNO, which is an additional 0.51%. And then I have UST Luna. Oh, I have UST Osmo on Osmosis. Sorry. I have UST Osmo on Osmosis, 2% of my portfolio. Great rewards. You get 100% APR, and I'm generally bullish Osmo. I'm happy to buy more when it dips and sell more when it moons from here. Don't care. I was recently told by someone that Osmosis is it's a chain, and it has a DEX, but the DEX is in the chain. So the internal infrastructure of the DEX is the chain. So it's not like JUNOSwap where it's built on top of a chain. It's built into the chain, which is one of the reasons why Osmo has no gas fees for swaps. Very interesting. Very cool. First chain, like first DEX that's chain only. The whole chain is a DEX. So I'm providing LP here with Atom Osmo, with Osmo UST, which has high rewards, and unfortunately with Luna UST, which I said, again, I'm going to sell when it's done. I'm also staking. So I have about like a combined maybe like 0.5% of staking going on between Atom, Osmo, Secret, and Stars. Stars is just an airdrop, so I staked it. That's about all there is there. But on JUNO, I'm staking like 3% of my portfolio. But I unlock like a fair amount of JUNO tokens in 14 days. And if it's still pretty high, I'm probably going to sell them. I didn't mean to put that much into like a 30-day unwind period staking. But the staking on JUNO is great, and I'm going to leave tons in there. I have tons in there that I haven't unbonded yet, so that's great. I've started to accumulate AVAX on Harmony in preparation for the Crystalvale launch, so that's going on. And then try crypto, WBTC, and ETH. That is 47%, 5%, and 5.5% of my portfolio is there. Why? Because try crypto 2 is 1/3 USDT, so it accounts for a lot of my stable allocation. If BTC and ETH fall, I want to buy it. And if they rise, I want to sell it because we're in a range. And so, actually, let me bring this up because that's the final note I want to give, is that this is Bitcoin right now. It has been really respecting a range, right? I've got this sort of triangle drawn here, and it's sort of respected that for 4 touches, but that's really not the headline story. The headline story is these yellow lines and how well it's respected them, right? Anytime it goes below this bottom yellow line has been a great buy opportunity, and anytime it goes up to or above this yellow line at the top, it's been great. Sometimes it ranges between these bottom 2 or these top 2, as it did here and here and here. And so it just got to the top line the other day, and I unwound a bunch of my Try Crypto by repaying my loan. On Abracadabra, you can just deleverage. So, you borrow a bunch. Like down here, I would leverage up. So basically, I borrow MIM to buy Try Crypto 2, to borrow MIM to buy Try Crypto 2 in a loop. And that increases my Try Crypto 2 allocation. And then it goes to the top of the range, and I deleverage. I sell Try Crypto 2 into MIM to repay my loan, to sell more Try Crypto 2. You understand the principle. And so that's been a really great way to sort of long and short, or I guess long and sell this range. And the whole time, I'm getting convex and curve rewards. What am I doing with those? I'm putting them in Bent Finance, the highest APR you can get right now for curve or convex. And so that's what I've been up to. My general position has shifted, but it kind of has remained, right? Where it's like crypto Twitter and all these traders, level-to-level traders, they're fucking annoying. And they're generally wrong because they're like, oh, we're at the bottom of the range. Oh, it's Goblin Town. And then it just reverses and goes back up to the top of the range. And they're like, I'm looking for a breakout to blah, 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 blah. And then it fucking falls again. And it's just like you could do fine just never listening to any of these people because they're just guessing. We're all just guessing. But I like the yellow lines. They've been very, very well respected. I'm going to keep doing things based off of them. I've largely stayed off of crypto Twitter and stayed out of Discord because people are losing their freaking minds. Holy shit. It's nuts how much people are losing their minds. It's natural to be scared. We've got war. We've got, the Fed tightening, which I don't think that's going to happen. But I kind of want to leave you with this, right? COVID crash. Massive quantitative easing, money being printed and put into the system. And people argue, all this money being printed gave people the capital they needed to cause this massive rise in asset prices. Now, throughout this whole range, money continued to be printed, right? So if money being printed was the necessary condition for Bitcoin to continue to rise, why did it fall here? Furthermore, if QE tightening was the necessary condition for Bitcoin to fall, why did it rise here? We knew that they were going to start raising rates all the way back over here. That sort of language was surfacing around this time. And so people think that, QE tightening, right? That's the reason we're falling and the reason we're going to fall even more. But here's the thing. All these people got free money. It floated. Let's imagine that every dollar printed by the Fed went into crypto. which is what people are acting like, which is not the case. But let's say it was. Every dollar being printed made crypto go up here. Now that they're printing less dollars, does that mean there's less money outstanding? No. It stays there. It doesn't get clawed back. It stays there. They're just printing less of it, which would indicate, if that's the case, that we would see a sort of blunted rise consistently. Oh, they're printing tons of money. Oh, they're printing less money. Levels off. That's not what's happening. So, I have a hard time believing that that's the case, that, oh, the only reason that these assets are rising is because money is being printed at a high enough rate. And when it's not a rate that's high enough, they'll all deflate entirely because people will pull out all that money because they need to pay it back or whatever. That doesn't seem logical to me. I don't know. But here we are at a higher high and a higher low and a higher low and a higher low, which is a macro higher low from here, and everyone is panicking like crazy. People are saying this is what's about to happen. Let me get a brush out. People think this is what's about to happen. Does that seem to make any sense to you? Is there anything about this chart that looks like that's about to happen? Like, the only thing that this has similarity to structurally is this. And even this is a bit different from it because it was just a downtrend and this is a general uptrend. But, people certainly did not know down here or even down here that it was about to go to all-time highs. So it's like, yeah, I have a lot of trouble believing that this is about to happen, given that there's no evidence for that. There's not a single shred of historical evidence that would suggest that we're about to go to Goblin Town. In fact, it's quite the opposite. So, am I worried? No, I have enough stables to buy if it goes lower than here. Lots. But I'm more worried that I'll never get that chance. That I'll be sitting in UST earning 20% when we get a 2x on Bitcoin. That would suck. So, yeah, I'm generally less afraid. I can definitely get afraid when listening to smart people. I listened to Altcoin Psycho's stream recently. What a smart guy. Very cogent argument for why Bitcoin might really, really fall, including the VIX. Made a really great VIX-based, volatility index-based argument for why we might get a lower level here. But generally, I don't care. I'm going to stay where I am. I enjoy the yields. I'm becoming a lot better at just chilling and yielding. I enjoys it. And that's where I'm at. So I hope this was helpful to everybody or anybody. And I'll be back, I'll probably less frequently while we're just like waiting. Because it's just like the more that I get my head in this stuff, the more I'm liable to see people on Twitter just like wiling the fuck out and just like letting that affect my emotions, which I don't want it to. I want to have a clear head. And so that's where I'm at. That's my portfolio. See you guys next time. And thank you so much.